Happy Monday, everybody. I hope you had a great weekend. Today is October 25th, 2021, and this is your Monday market update video. So there's no shortage of information to share today, so I want to jump right in and get right to what happened last week, and then we'll talk a little bit about what we're watching for this week because it's going to be a big one. Stocks rebounded to all-time highs last week as we continue to put that ugly September behind us. Now, remember all those statement numbers that we talked about that you looked at last month? Well, we have followed the worst month since March of 2020. That was last month, September, which seemed to be following, and we're on our way to setting up for the best month since November of 2020. So let's see how we end up. Earnings and word out of Washington about spending bills without some of the feared and priced in tax hikes, that got the market going last week. Let's talk about it. Monday started down early with some inflation and some growth concerns that gave way when the 10-year yield pulled back, which got the large cap tech stocks moving forward. And of course, they represent such a large part of the S&P 500. The S&P 500 was up about 1/3 on the day. The markets took the momentum into Tuesday and overlooked soft economic data and went straight to the strong earnings. Fed comments too, but that didn't have any impact. The S&P 500 was up almost 0.75% for the day. So we saw Wednesday, more of the same on Wednesday. More solid earnings, even with some big names in finance coming out and making some negative comments about the markets and inflation. The markets posted another 0.37% gain on the day. New all-time highs came on Thursday with earnings continuing to come in ahead of expectations. Details on that more in a moment. We'll talk about earnings. And this was the day, as I mentioned before, that rumors hit that Congress may abandon their tax hikes in these new spending bills. This is big news for corporate earnings. We'll talk about that also in a second. The S&P 500 closed up 0.3% for the day. Better than expected economic data, as defined by most, helped stocks open higher on Friday. Fed Chair Powell did throw some water on that fire with some comments that were taken by most to be relatively hawkish, but not too hawkish. So stocks did stabilize, but the S&P 500 closed with a very slight loss on the day. For the week, the S&P 500 was up 1.64%. And now let's talk about some real news. Let's talk about this week. I do want to talk a little bit about earnings, as I mentioned to you. What we've seen and what we will see this week. First of all, according to Deutsche Bank, 117 S&P 500 companies have already reported earnings, and about 85% of them have beaten on the bottom line. That's, again, like last quarter, a record, it's above the average that we're used to seeing in the last 5 years. We'll get another 1/3 of the S&P 500 reporting just this week. So we've got Facebook, Alphabet, Microsoft, Amazon, and Apple, just to name a few. We also get about 1/3 of the Dow industrial companies this week: Caterpillar, Coca-Cola, Boeing, McDonald's, and some more. This week is full of some of the biggest names, obviously, and the biggest companies in the market, and this will continue to set the tone for the coming weeks. So we'll only get one big economic number this week. We got a couple of small ones, but one big one, and again, it's going to be on Friday. The core CPI, which, remember, that's what the Fed watches for to keep an eye on inflation, and it will be their last big data point before they meet and make their announcements on November 2 and 3, and that's when they should be announcing their tapering. Now, remember, a hot core CPI number could help to add to that case that I mentioned before that we should have more aggressive Fed action. We'll see how that goes. As for the tone of the market, we spoke about last month's pullback. We talked about it being caused, by among other things, four unknowns, four things we didn't have an idea about. Those were Washington, earnings, yields, and the Fed. So in the past few weeks and more this week, we've gotten some clarity on at least two of these unknowns, or at least as much clarity as we can actually expect this time. So with Washington, it appears that last week the Democrats abandoned the tax hikes, especially on corporations. If that turns out to hold, then that is great news for us going into 2022 for earnings and earnings estimates. And speaking of earnings, as of today, the results are coming back great. As I mentioned to you before, we've heard from most of the companies, and what we continue to hear from most of them, which we were worried about, is that they've had issues with costs of inputs and supply chain. Of course, supply chain, the words that we've come to know a lot of. But they've been able to manage them. And in fact, they've been able to pass most of those costs on to us, the consumers. Now, the question really is, how long is that? We're going to just pass the cost on to the consumer. How long does that really work? We'll just have to see. So we'll see what happens with the 10-year yield. Remember, steady movement is what we want. And the Fed, we'll just have to see what happens with that. And we should know about that next week. Without a question, there's a positive tone to this market. The market is feeling a little bit tired in the short term, but we are seeing a setup for what could be a positive move into the end of the year. Volatility will be in place, so keep an eye out and watch that. So we still have the Fed wild card. As I mentioned, a case is being made for more aggressive Fed action, and the market is totally not priced for that. So if we start to see that, then you will see that volatility return to the market. Also, just so I don't go another week without mentioning it, COVID is not gone. So we'll probably clear this most recent variant without too many bumps and bruises. But in China, they're in the process of locking down about a third of their country because of the Delta variant. So we'll just have to see how that goes. But on the positive side, we're probably going to see approval of vaccinations for kids soon. So I think you're probably going to see the positive outweigh the negative on that. Final note, as you noted, the last couple of weeks, we've had Fed speaker after Fed speaker after Fed speaker. They are now in a quiet period, so we don't have to listen to them continue to hit the airwaves. So that volatility will pull back, at least for this week, leading into the next Fed meeting. So as you can tell, this week is full of earnings, full of news. You sprinkle in jobless claims, the core CPE on Friday. And once again, you have a pretty active week. So stay tuned. As always, call me if you have any questions. Have a great week.